Good morning. Today is Thursday, April 4th, 2019. Welcome. Market the open outcry, the former open outcry. I don't know. I keep calling it the open outcry. Really no floor anymore. Just because that's how long I've been trading. But that's what I usually use for a trading session. I usually use the 8 o'clock open. As a starting point on a day that I don't have any information. What we don't have right now is any volume bars to speak of that's tradable. So we're on the sidelines until we see anything, and usually what I want to see is a volume above 1,000. And if we look back here through the session, and I'm going to go back far enough that you can see what last 1,000 bar that came across in volume, so you can see what I'm looking at. Still looking for one. We're in the prior day right now. Here we go. There's the first one that we ran into. It comes back from 1126, and I'm waiting on something, an event of some kind, to give us a reason to be looking in the market right now. If we look at the market right as we are looking, it's kind of bouncing on the pivot right now, so a little bit of an indecisive area. So we want to stay away from just trading the trade, as I like to say it. Wait for something to come across. When I made my mistakes yesterday, I don't want to double up that right now. Let's nip it at one bad trading day and move on to the next. That's where we are right now. And when I see something, I will let you know. If there's any questions at all in the room, just feel free to ask while we're sitting here. Tomorrow, I have my lithotripsy. So as a reminder, I don't know what time that's going to be scheduled yet, but I'm assuming it'll be early. So I am saying that there'll be no trading room tomorrow, since I have my doctor's appointment, and most likely that's going to happen. They'll have me scheduled it for early to be in. I'm assuming last time I was in at 6 or 7 in the morning. So there'll be no trading room tomorrow on Friday, and that's quite fine with employment numbers coming out anyway. Although I do like trading on the employment Friday. So looking at what I would call a short range right now, a small box, we'll talk about that in a second. And when you can count the bars inside the first 5 minutes of trading, that's usually a sign of a market that's not ready to go anywhere yet. I mean, if we can count them really, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. So it's about 24, 25 bars. When you can count them, like if this was the 5 minute right here, between here to over here, that'd be tough to count these bars. Therefore, it looks a little bit more volatile. All right, so let's mark the range here at 805. Once 806 prints, and we'll know our opening range. I don't do this all the time, but I like a small box is something that I call it a small box. It's another way of staying out of bad trading decisions. So if we look at our first 5 minutes of trading right now, that's our first 5 minutes. And the only thing I would think about doing right now is shorting below pivot. The open of today is 62.50. What I prefer to see though is 1,000 volume bar to get involved in it. But if you're looking at the CLPoRT strategy that I talk about, you'll see it in some of my trading situations that I talk about. Right now, you'd have a short signal at 62.48 and a long up here at 69. Now I'm not taking either one of these trades, but that's part of what I call the CLPoRT. Now this is not a valid. Now let me tell you why this is not a. I think why this is not a valid trade setup today. When you can count the bars. Now this is what I call a small box. Let me get my picture, my ugly mug back up here again. So some of my earlier stuff I put out on this strategy talked about the CLPoRT strategy. What that stands for, CLPower Open Range Trade Strategy. Personally, I don't think you should take this trade on, the open range trade, when you've got a small box. Now, that's for instance, let's say that the box, instead of was like 20 something lines in here, was like this. Was between here and say this line right there. Now this ends up, and then this would be your range between here, right in this area, to right in this area. Now you have a bunch of bars and you have a big box. So that this was your box right here. Here's a big box as opposed to a little box. So this is a big box where you have a hard time counting the bars in there. It'll take you some time to count them. Where a little box, you can say, oh yeah, that's about 20 bars. I can count those. So that's what I mean by a little box compared to a big box. So that's why I say you bypass the open range trade in a little box, because there's not a lot of volatility in the market. Therefore, this is a market that most likely will end up, what's done for me in the past, these small boxes, is it'll bring me in and then it'll go straight to a stop, or maybe it goes up a little bit and then it goes down and knocks me out, or it comes down here and fills me and then it goes down my way a little bit, then it comes back and get out at break even or something. So without volume to help me out right now, I don't really like the open range trade, and especially in a small box. Hopefully that makes some sense for you. So when I'm talking about small box in the open range trade, so some of my information I got out there talks about the CLPoRT strategy. It works best in a big box. So for instance, when I was showing you where you can it's hard to count all the bars that are on the chart, that's when it works the best. When you can sit back and say, oh yeah, it's about 20 bars and you can kind of count them, and it doesn't take, let's just say it takes you less than a minute to count the bars, then you know it's a small box. And you can see it's a small box right now because it's small. This is a small, low volatile market. So in 5 minutes, we only printed about, what, 20 bars or so. All right. Hopefully I didn't beat a dead horse there, but that's what I'm talking about. Let me pause Camtasia here until we see something we want to trade. All right, so let's follow along here, and so we understand what I'm talking about. So if this would have been filled at 62.48, so this is your end, the short. which I am not trading this, so there is no trade on. You can see there's nothing in here. There's no buys, no sells, so I'm not in this trade. But I'm talking about why I don't like the trade in a small box right now. In the opening range is not big. So the stop on this trade, today it's 14 to 15 ticks. Half of that is about 7 to 8. That's not enough. So you could run with either a 10 tick stop, or you could run with a 15 tick stop that trails behind to start with. So at the very beginning of the trade, the stop would be 62.62, and the trade has moved 3 ticks your favor. So you could come down on this 3 ticks to 59. So instead of a 15 tick stop, it's moved 3 your favor, and so you could have a trailing stop behind it. So now your stop is around 59. Let me double check that. 48, 45, 15 should be minus 12. Should be 60. I don't like being on even numbers, like big zeros and big fives. So I would err to 61. So this is what I'm talking about, a low volatile market. I mean, if there was any oomph to this market, it would have just went through like a butter with hot bread. You would have shot on down. Now, since I've learned a little bit more in the markets over the years, so well, what's this line here? Well, that's that trend line that came into the charts from yesterday, and what I did back is I looked back at that line. So if we look back at why are these trend lines on the chart, it's from yesterday's volume bar that came out at 9:30 off the inventory report. The volume bar was 4,826 in length, or contracts traded there. I'm going back to the 9:30, and what I've measured is the length of the bar itself. So this is the top of the range, and this is the bottom of the range, and this all happened within this bar it's a 5-second volume, as this volume bar right here was, and you can see it's a skyscraper, right? I call this HVS sky. It's all by itself. There's nothing around it. So it's a significant point in the charts, and that's why I mark it. So there's going to be some support and resistance around these lines. So basically you're looking at support and resistance between 62.45 into 62.17. So this is a danger area. You want to be in it before it, and it's dangerous to be inside of it. So basically when you're looking at it, it's like short below, long above, is how I view it now. So when we were looking at getting short on that trade just a second ago, which, and it's obviously moving our favor right now. The problem that I run into this is that it's more it just doesn't work as like I like it to work. And what I started noticing is that when we had these small volatile or non-volatile markets where it was really short, in other words, this small box, right? This pretty much told me that this was going to be more times than not I would take a loss on my opening trade. And it came to the point where it was almost 80% against me. anytime I had a small box. And that's why, you know, I didn't like the odds of it. The 20% winning rate on a small box to 30%. So I mean that was, so I was only winning 3 out of 10 trades when I started looking at this small area, and I'm thinking I was winning more. You know, out here like this, I'm winning 6 out of 10. So you know this is a lot better. I'm winning 5 to 6 out of 10 over here, and I'm getting 2 to 1, and it's still, it's a positive win percentage and a win loss ratio. So I'm making more money when I have a bigger box. Now, if you're trailing this behind it, let's figure out where we are right now. 41, so it's moved 7 ticks our favor. And the 18 tick stop, you're behind it by 8 now. So around 56, it looks like, on the stop. $56, $57. And you don't want to be on 5s and 0s. And the target, well, the 1P target on the trade right now is 62.30. So it's like, what's going to get hit first? Our trailing stop or our 1P break-even area, which is 62.30 now. So we need the market to move roughly to here for break-even. Now you get break-even before that with the trailing stop behind it. The problem is that if it moves against you right away, today you would have been looking at 15 tick stop. All right, pausing here. All right, so now as we're looking at this trade, what are we looking at? I'm looking at 3 ticks higher than this now. I don't want to be any closer with current market until we run our 1P target. I don't want to be any closer than 3 ticks from this last minor swing high. So if we look at that, that's 53 and we're at 57. So I mean I can adjust to 56. That's about as close as I want to get to the market right now. And this has taken a lot of time just to come down here. So time and trade is something to think about as well. So we came into trade at 8:11 and now it's 8:25. It's been, what's that? And that's a long, that's like it's an eternity in a day trade, when a lot of times you're running to profit target within minutes of being in, if not seconds. So this is a long time to be in the trade that's not moving your way. So what and then I started noticing why is this not moving? Then I started noticing, well, a couple things started making sense to me. The small box, for instance, started making sense to me. Here's that small box, all right. The volatility, nope, we don't have it. And then I started looking, okay, why is this not moving? Well, there's a line of back there that we're going into. So there's support becomes resistance, resistance becomes support, and all that starts, and then it's like, huh, I wonder why, you know, and you start looking at it and you start thinking and you start scratching your head, right? This is my head and I'm scratching it with my hand. I'm scratching it and I'm thinking, why doesn't this make sense? Well, that's why. The volatility's not there. So then I said to myself, well, what do I need to see in volatility to make me think, all right, maybe the trade is more doable than not? Well, that's when I started looking at volume. I want to see some volume kick in over here on that right edge. Make me think All right, now perhaps the trade's doable more than not. Otherwise, I want to stand aside and wait. And maybe I stand aside all day and the market does nothing. All right, nothing going on. Stopping video here. Actually, let's make this the end of part 1 right here. Let's complete this trade out before we do that. But I'm gonna mute myself out right now. I mean, not inventory, the open trade, open range trade. It made it to, not through, but it made it to 1p. Now this is historically where I like to get to break even. And we can look here. This is, I really don't want to take a loss on a trade that's moved my favor at 1p more, especially in a short. So this is where I'd be at break even now on the trade. We came in at 48. So let's move this down here to 47, 48. So today it's worked out. Go figure. Now it's a matter of how much profit's available here on this trade. Is it only going to be worth one tick, or is it going to be worth more? Like I said, this is still a low volatile market right now. So I'm expecting the market to come back, and it wouldn't surprise me to come all the way back into the top of the range here at 62.69. So I was like, wow, the best case scenario is you get a tick here. So that's why I don't like the small box trade. Once again, look at that right there, that volume that's sitting at 62.30 and 62.25. You have 273 and you have 201s down here. That should run some, I might run some high spike volume here if we get through these levels. So let's keep our eye on that and see what happens through here. All right, as we were talking about earlier, and I'll have it in the room later today, you can go back and look at the classroom. So this trade, we talked about it, why I don't like it anymore. So the open range trade, Dennis, since you just got in the room, I'll go back and you'll see this. What I talked about today will be the small box. So a small box is a low volatile type of environment on the open range trade. It used to, I still call it CLPoRT. And it's not, doesn't work really good in a small box environment. In other words, low volatile market. Today, it was only worth a break-even trade. So it did go 1p our favor eventually, and it took forever to do it. But it didn't really work out really well. So I mean, it's a positive trade, but it's not something that I know that this trade seems to work a little bit better when we have a bigger box. And go back and look at the video that I'm cutting now, and you can take a look at what I was talking about a little bit later on. Welcome, by the way. Good morning. Let me stop this video here.